All right, well, good afternoon, everyone, and welcome to the February 2nd. It's our gala celebration day of the year. Happy Groundhog Day to all of you. It is our national holiday. We were actually born on February 2nd, 2005, so we're 16 years in the running at Manifest Investing, and it is a day that we tend to celebrate quite a bit. My name is Mark Robertson. I am founder and managing partner of Manifest Investing, and we love the fact that you guys are all taking time out from your day, whether you're in the sunshine of the southern climates or if you're up here in the icebox with us up north. Welcome. I'm joined here by my dear colleague, Ken Kavula. Ken is a champion investor and educator in the realm of investment education. Welcome, Ken.
Thank you, Mark. Hello, everybody. Glad to be here.
And we also have special guest. She's one of our Knock It Out of the Park guest damsels at the monthly roundtable webcast, Kim Butcher from Florida.
Good afternoon. Hello, everybody. I hope you're doing well.
And Hugh may join us. Hugh is always a wild card because of his time. You guys have all heard the stories. He's on the front line of getting vaccines to you, so most of you would tend to actively support his efforts to get vaccines in our hands, and that's what he does in his day job. All right, so let's go ahead and talk about some of the stuff. What we're going to focus on, at least some of you are probably tired of us focusing on this, but we have so much fun that we're going to do it at least one last time, and maybe just a snippet next week when we talk about the contest going forward. We've been running this contest now for 14 years, called the Groundhog Challenge. It's a stock picking contest where groups and individuals enter. Give us between a minimum of 5, a maximum of 20 stocks, no penny stocks, and they're locked in. It's kind of like a time capsule approach. It's a nod to Warren Buffett's suggestion that you should invest like the stock market is closed for the next 5 or 10 years. Well, we don't have that kind of patience, but we can make the selections and basically see where we end up a year later. Like we say, we've been doing that for 14 years. We're going to show we're in the last day of Groundhog Challenge 14, and we'll take a look at that and then talk a little bit about what people are choosing for this year. But today is that day, as I was just telling the audience. Get some pizzas and perhaps some adult beverages, and the Cracker Jack team of accountants gather in our conference room and tabulate the results for the current contest. We will absolutely guarantee to have results faster than any of the national or state elections here in the recent past. Fair statement, Ken?
Fair statement, Mark.
So it is a bit of a report card on stock selection, and we do enjoy it. It's a great contest. You guys are coming with all kinds of interesting ideas this year, so we're going to have some really interesting stuff to look at here over the next few weeks. Let's go ahead and get the legal paperwork out of the way. None of this should be construed as a recommendation. If Ken or I whisper the word Gamestop, that doesn't mean you should run out and buy it. It's that simple. Not even Kim. If Kim whispers it, don't do it unless you do your own homework, make your own decision, and understand what type of decision you're actually making. This is an educational demonstration. It's about the illustration of the methods, principles, techniques, analysis methods of the modern investment club movement as promulgated by NAIC Better Investing, or as interpreted and deployed by Manifest Investing. Opinions are ours. We will try to tell you if we own a company that we're talking about. And we do a monthly webcast that we'd like to remind everybody about because it is a whole lot of fun and it is an informative / educational session. If you'd like to be on a reminder for that roundtable monthly webcast, please email nkavula1@comcast.net. If you have follow-up questions or if you'd like a copy of the slides, my email address is mark@manifestinvesting.com. As any Manifest Investing subscriber knows, we put copies of these slides, often with a bunch of follow-up type Q&A stuff, on the Manifest Investing forum. So that's one reason to cohabit with us. Here's a quick look at the type of stuff we've been talking about, kind of a standing agenda. It's our bullpen Q stuff that we will be talking about. I have received a number of requests to go through the preferred procedure, Ken, from a number of people. So I think we probably want to set aside some time either in a separate workshop or here at a bull session to actually dive into, why does the preferred procedure matter? I think that's something that you support pretty actively.
Absolutely.
And just some of the other topics, you can scroll down the list there and we'll be taking a look at stuff. One of the other comments that's come in this week in a little bit higher frequency than usual, and I think it's got to do with what's going on in the stock market, options. How do we think about options? Should we be thinking about covered calls? Should we work to understand covered calls? And we believe that's the case too. I've used covered calls on a limited basis, and they're not high risk, and they can be a very prudent approach to as a component of portfolio management. So we'll probably throw those on the pile and have something to say about those in the near future too. All right, here's our chart for the week. This is a bit of bragging, so be forewarned that we're bragging a little bit here. You may recall back in September and October, as Ken and I were doing the shopping for the best small companies for 2021, we always come out with that around Halloween. We kept remarking that the incredible performance of the Wilshire 5000, driven by a very small group of stocks, including companies like Microsoft, Facebook, Google, and a few others. That Vanguard total stock market, it is cap weighted, and those mega companies were actually driving that number up quite a bit. And we noticed in some of the performance comparisons that we had been doing during the fourth quarter of 2020 that things like the value line arithmetic average had been lagging or suffering for quite some time. And what that was basically screaming from the rooftops to us was that, boy, you really ought to be shopping amongst some of the smaller companies. And so come around Halloween time, and this is a performance chart from stockcharts.com. I think this is from the free version. I may have to check that. We have a subscription at Manifest. But you can actually go into the performance chart and compare VTSMX, which is the Wilshire 5000, comma, and that's the ticker for the value line arithmetic average. What I want you to notice is that the value line arithmetic average is up by a pretty healthy increment versus the Wilshire since Halloween. So what that is saying is that some of the smaller companies have taken off and done pretty well here in the last few months, and it certainly shows up in the best small company results so far. Is that as much as you want me to say about that, Ken? We don't want to jinx ourselves?
Well, it's also demonstrating, Mark, that some of the FANG stocks, the Apple, Alphabet, Netflix, Microsoft, and Facebook, that they've, with certain exceptions, over short periods of time, they've gone essentially flat for a while. Now, the last couple of days, they've kind of gotten reinvigorated, and they've been moving upwards quite dramatically again. But it's a combination of two things: the outperformance of the Russell, the small caps, and the flatness of the FANG stocks, which make up a significant portion of the Vanguard Total Market Return Index. I don't have a number, but I'm going to say that it's a significant portion of that index.
Yeah, I do know that 20% of the Wilshire 5000, the top 20 companies in the Wilshire 5000 probably account for about 50% of that total result. And that's a number we should look up and commit to memory, because it's pretty powerful. And it's just a reminder that when you think you're investing in 5,000 stocks, you really are investing in more like 40, and the rest of them are along for the ride. The difference between that and the value line arithmetic average is significant because they're all equally weighted. Inogen, INGN, has the same impact on the value line arithmetic average as Microsoft. It's an important thing to remember, and it's one of the reasons we talk about the value line arithmetic average when we're talking about all of the above investing. And we really, really, really believe in all of the above investing, a nice blend of small, medium, and large. So just a quick moment to say, so far things are working out kind of as we might have expected. All right, do want to take a moment and talk about the thing that everybody's talking about. I get like 3 articles every 3 minutes on the news feed on GameStop and Robinhood. It's really kind of numbing, but this picture came out yesterday. It was followed up by a comment by Bob down there at the bottom that thought it was going to be pictures of Mark and Ken.
I'm reading that for the first time. Yeah. So
that is not Mark and Ken. It is 2 guys, in the realm of investing, but no, that's not us. And just as
I like the upturned shoulders on Eddie Murphy's top coat here. I used to have a coat just like that,
Well, maybe we can, get that attire up and running for a future in-person presentation, Ken. I'm willing to go out and look for a coat with a little fur collar on it, and let's move on before we get ourselves in trouble or something thrown at us. Just as a reminder, this thing that's going on with GameStop, first of all, it's been going on for several months. If you really dig into the situation and look at what's been going on, it is a group of people with a plan. It goes all the way back to September when you dig in and figure this out. And it has to do with the notion of extreme shorting on the stock market. We'll spend a moment talking about that, but it's manifested in a very rapid price increase. And this is what we talked about a week ago. The stock price had gone from first of all, it was $4 a share not that long ago. And it had ramped up in a matter of hours from like 10 all the way up to 65. And we thought that was excessive. Everybody hold on to your butts, because that was nothing. Here's where it ended up going. And we don't know if it's done yet. You're looking at, again, the type of chart that you'd never see at Manifest Investing. This is a 15-minute interval chart going back, I believe that's 7 days. And you can see that huge price run up on the left-hand side. And on January 28th, you can see that the stock price reached $483 a share in the morning. And by the end of the day, it was back down around 180. I mean, this is wild stuff. It is definitely okay corral time. Just in the last couple of days, it's dropped from the 400 range. It actually bottomed out at 74 this morning. This is not the type of ride that we are accustomed to seeing amongst our long-term investments. Again, we look at a company like GameStop and see a company worth probably $15 to $20. So this is something very artificial.
And Mark, it's exactly what we were kind of warning about a week ago, that while the strategy might have been to go after the big guys at the beginning, nobody had any strategy for how to unwind the position, how to get out of the position. And I have to think that there were as many little guys as big guys burned in the last couple of days, as that stock went from the 200 and 300s down to the sub 100 level. It was down, the last time I looked, it was down over 50% today.
Yeah.
So, it has to you have to understand that when a stock moves up like that, and you can maybe have a little bit of flight into what's going on, you don't have any idea when the bottom's going to fall out of that thing and the opposite's going to happen. And you can't control, I don't believe at least, you can't control who's going to be left holding the bag.
Yeah, it's a bizarre situation. I actually bought a share of GameStop. Full disclosure, I bought it back last Tuesday, and I put in a order and owned some at $85 a share, so back right in this range. And I actually put a trailing stop limit on it because I was gonna benefit from a ride up, right? Go along for the ride and see what happens. And you see that tiny little hair-like projection down here? That's where it went down and actually took out my shares. I only had a couple of shares, so we're talking about just a couple $100, so no big deal. The reason I did it is I wanted to just see what's going on behind the scenes at Robinhood. What's going, I'm getting all these phone calls and emails. I wanted to figure out what was going on. And
I think we've both proved to each other over the years, Mark, how inept we can both be when it comes to speculation. So
I am not a day trader. I really stink at it if I would, because look at what I missed out on. So,
yeah.
But what I will say, and a lot of the uproar we heard over the last several days, and I experienced this firsthand because, again, I got in the trenches just to figure out what these people were upset. I'm sugarcoating that word upset. When I went into Robinhood, it wouldn't even let me look up the ticker for several hours one of these days. That's how tightly shut down it got. Then when that changed, then they would only allow you to buy one share. And while this was all going on, you were allowed to sell a share. And so this is what you're going to hear about in the congressional testimony on February 18th and what people are talking about. I don't understand. I don't like any of this. I think that all of this is bad for the market. I do think it's good that more people are getting interested, but this is not investing, obviously. It's non-core speculation or on steroids. But just so you understand, there's some weird stuff happening. Changing the rules midstream, and I do believe they changed the rules a little bit here. They didn't even follow some of the mechanisms that they had at their disposal to take care of this stuff. There's never a promise that a brokerage firm will fill an order when you place it. They don't have to mess with that. In fact, they don't even have to really tell you why.
I also think, Mark, it might be really interesting for us to examine the role of clearinghouses in a stock trade. I was kind of surprised to find out that Robinhood acts as its own clearinghouse. It specifically chose, when it set itself up, not to operate with an outside clearinghouse. So I'd kind of like to explore what exactly the role of the clearinghouse is, and why there was a call to have more capital in Robinhood's accounts at one point to cover the possible movement of the stock in both directions.
Yeah.
Well, Ken, I thought I read somewhere that you buy it on Wednesday, but before that finishes out buy it on Monday before it finishes out on Wednesday, Robinhood has to hold cash available whether the stock goes up or down, and that's why they need the infusion of cash. And I thought I had read that Robinhood used Ken Fisher's Citadel.
It's not Ken Fisher. It's Ken Griffin.
Ken Griffin, yeah.
They do some clearing through Citadel, which is basically a hedge fund. It's one of the top performing and largest hedge funds on the planet. Yeah, so they do have to retain certain reserves in order to clear the books. That's the reason that they went down to one share that could be bought. It's now up to 20. You can own a maximum of 20 shares of Gamestop in your account at Robinhood. So
well, again, Mark, I'd like to put on our list. I'm not sure I understand the role of the clearinghouse, and I think that dovetails real nicely into the discussion about options and when is your money actually there after a trade? What does a brokerage have to do in the meantime? I know, for example, that when I make a trade in a really big brokerage firm, my money is there for me to use, but it's not really there for me to use. I know it's the brokerage house that's backing the money if I want to turn around and buy something else immediately, because the trade itself doesn't close for a period of time.
It's 2 days.
So I'd really like to come up with a nice, simple explanation of how that whole system works, so we can have a little bit more light shown on the whole process.
Yeah, and for people who, if the hair goes up on the back of your neck and you say, well, that's not right, I would remind everybody that this is the way banking works too. If every single depositor at a bank showed up and said, give me my money, they don't have it, because they're basically allowed to loan X number of times on the same amount of money. So again, it's a leveraged situation. A run on a banking is exactly that. Everybody showing up and saying, I want to take my money out. And they don't have all your money at the bank either. What they do have, and the same is true with investing, there is a central organization with banks. It's the FDIC, where your deposit is guaranteed. There's the same thing. I don't remember the ticker, or the actual terms in it, but it's the DDTC. It's the clearing center for all stock market transactions too. Same type of thing, but your particular brokerage may not physically have that. And by the way, for those of you that need to know, GameStop is at $105 a share right now. All right, a little bit more on the anatomy of what's going on here. Short selling is basically the opposite of everything that we do. It's short-term oriented. It's not looking for an excellent company to buy at a low price. It's looking for a lousy company to buy to sell at a high price. That's what short selling is. And in the case of GameStop, almost 100%. In fact, some people measuring it a slightly different way, measured the short interest at 140% of available shares versus the flow. I calculated a little bit differently, but GameStop is still, until the next report comes out, the most heavily bet against or shorted company on the stock market. That's part of the story, that you want to understand the mechanics of what's involved. And it's pretty hairy. You've also probably seen Bed Bath & Beyond, AMC Entertainment, and AMC Networks make this list. But basically, these are shares that are loaned and need to be replaced. So it's basically a promise of a future purchase, if you want to think of it that way, the higher that number is. Now, one of the ways that could be potentially a little bit interesting as you get farther down the list and you're looking at a company like, for example, Ebix. As I was thinking about my Groundhog selections for this year, I'm looking at Ebix and seeing a pretty decent company that has a 22% short position. You could almost think of that as support. That's an outstanding IOU, if you want to think of it that way, for a company like this. And it could actually work as, again, support for a position in Ebix. Just to, again, some kind of off-the-wall thinking about this sort of thing and how it might be taken advantage of. Go ahead, Ken.
It's interesting that you mention Ebix, Mark. I have a contest in my chapter that we run, and my entry to the contest has 10 stocks, and one of them is Ebix. And for the last week and a half, Ebix has been running counter to the market.
Mm-hmm.
Last week, when we had a particularly bad down day last week, I think it was last Thursday, Ebix moved me to the top of the contest. It went up about $8,000 when everybody else was moving down about $4,000 or $5,000 in their portfolios. Today, in the same contest with the same stocks and everything else going on, I've moved back to third place, as most of the other entries have moved up, and Ebix has taken my portfolio and moved it down just a touch. So my contest portfolio today, in a very strong up day, is just barely holding its own because of Ebix. So it's a really good example for me to maybe take a closer eye on these really, really volatile stocks and find out what the short interest is. It's not that difficult a number to find, is it?
Oh no, it's fairly available. It's one that Len Douglas has published quite a bit on the Manifest Forum, at least keeping people aware of it. Matt Spielman had a remark about cheesecake a few weeks ago, and that as to, well, and his remark was, well, now I understand why it's going up here lately. It's on this list, and again, that is, the higher that number is, it's like a outstanding future purchase of these companies at some point in time. So if they
Mark, I have a number that's lived in my head for quite a few years, that short interest under 20% is while it's not good, it's not necessarily that dangerous. Maybe that number is a little bit too high for the number in my head. Maybe I should be moving it down to 15 or 10% even as I pursue some of these stocks. Ebix happens to be the only one that I have any connection with on this entire list, and that's only in an imaginary contest. But I'm thinking to myself, there's 3 or 4 that I've had interest in on this list over the last maybe 10 or 12 months, and I should be putting this finding of the short interest number on my list of things I'm looking for when I'm doing a deep dive.
Yeah, it's useful information to know. I don't think it enters into any of the primary analysis, but like I was saying, if you already had a situation with a company like Ebix, it's kind of like frosting on the cake from my perspective. To answer your other question, Ken, I think the average short interest right now is down around 4 or 5%. So that's average.
Okay.
So it's just
Dennis is making me feel real good in the audience, telling me that Ebix is down 15% today. Well, Dennis, it's imaginary money. So while I regret that, I'm not really panicked about the whole idea. And we also have a couple people wanting to know, is this chart coming directly from Manifest? No, this is not coming directly from Manifest. Mark created this chart, so you can create the chart as well. I'm sure that some of the numbers came from the Manifest database and from the Y-Charts database, but it's not a chart you can duplicate yourself.
No, it is our database at Manifest, but it's not something at your fingertips, is what Ken is basically pointing out. The other point that I want to make is that the numbers that are shown in red there in the short interest column, they're going to go down. And you're going to see a change in the landscape because these companies that got caught up at the top, the hedge funds shorting the companies up at the top, that was a pretty painful moment for them. The estimates so far are that hedge funds were down. Notice I didn't say lost. We're down $6 billion at the end of January. And that's not a small number. All right, let's shift gears to the Groundhog Challenge. Again, this year's contest wraps up tonight. So it'll be pizza by the fireplace along with our accountants. So we'll be looking at the results for this year, and we start a brand new one that will commence tomorrow morning. And everybody's invited. You have to pick a minimum of 5 stocks. We divide them up evenly. You can pick as many as 20, but as Ken's going to cover here in a minute, that hasn't shown to be a real productive approach. If you're interested in winning the contest, probably a better idea to have a little bit less. No penny stocks, nothing before $1. It is for individuals and for groups, and you guys can all read this in the session notes later, so we'll let it go. Again, we've had a lot of fun. This year's results are pretty spectacular. 4 out of 5 participants are beating that Wilshire 5000 we were talking about a few minutes ago over the trailing 1-year period. The average return is 47%. That's wild. One of the reasons that it really kind of makes me smile is I know that many of the people in the contest are putting in, especially the investment clubs, are putting in actual holdings of their club. It's not just something they're playing with or trying to hit home runs. So these are the leaders. They're not moving around a whole lot week to week. So the results are basically in. Andrew Spector is expected to win. In fact, if we were CNN, we'd be calling the race for Andrew Spector at this point. And he's only a few hours left, and he's $300,000 ahead. So he will be our individual champion this year. The group champion will be the Orange County Model Club from California, just south of Los Angeles in the vicinity of Disneyland. And they've come out of nowhere to be our group entry this year. A number of other participants, Marie, one of our small company enthusiasts, Barath out of Houston, has been at the top of the leaderboard the last couple of years. Ken Mobley out of Pennsylvania. He actually has 2 children in the contest that are in the top 30. So the Mobleys made quite a run on the contest this year. And you can just see going down the list, perennial group leader, Broad Assets from St. Louis. We're going to talk about them in a minute. Again, finished near the top of the leaderboard. But there's just some really good stuff. The Cool Kids, that happens to be the defending champions. That's Herb Lemcool's grandchildren. It says Traverse City there in the middle. And They've got quite an entry for this year also, with a huge bet on technology. Former champion Bernie Meister near the top of the list, and some of those others are pretty routine list leaders. So those will be in tonight. Anything jump off the page at you, Ken, before we roll to your slides?
No. It's been a really good contest, and obviously the return has been absolutely phenomenal.
You probably want me to highlight this one near the top, and
yeah, that's my investment club. That's pretty good.
that's one of your. Okay, I'm not even going to say 19. One of your 4 investment clubs.
Right.
Yeah. All right. Well, Ken did a little forensic stuff, so let's go ahead and dig into this a bit.
Well, I always find it interesting to look at which companies have been chosen by the most people, not necessarily the highest dollar amount in the contest, because obviously if you choose 5 stocks, that's $200,000 into each stock, and if you choose 10, that cuts it to $100,000. But I look at the number of entries, and I was amazed that a year ago, 37 of the entries, and that's more than 40% of the entries. There were 80 some odd entries in last year's contest. Went with Booking as one of the primary stocks to take a look at. I happen to think that Booking might be a decent idea for this coming year. It only gained 3% during the COVID quarters, but as we open up, I know Natalie and I right now are working hard to make sure that in May, June, July, August, September, October, November, and December of this year, we have short to medium-sized trips planned. We're going to travel the country and try to do as much as we can because basically we've lost a year and a half of our retirement by sitting at home watching the snow melt. I also think that Air Lease, chosen by 31 of the companies, might be something very interesting to take a look at going into next year. Now, what I find amazing is that these highest stocks by popularity are all stocks that we're pretty familiar with in the Better Investing, Manifest Investing community. I don't think that most of you will see a strange name at all on this particular list. And I do think that you could have put together a really solid entry by just picking 5 or 6 of the most popular stocks. Look at the next slide, Mark. Here's where you start to look at stocks that nobody knows about. And maybe what we'll try to do is get you a list of the least chosen companies before the contest gets too much older, because that provides a list of ideas where if any of you know more than half dozen companies on this list, then I think you probably know more than the average investor in our community. There's a lot of strange, odd names, and yet look at the return. I made a list of all the stocks that returned at 150% or more. And then I narrowed that list to just the ones that had been chosen once or twice. And that comes out right here. Some of these stocks are really continuing to run. Veer Biotechnology, which I know nothing about except the name, has been on a real tear since I made this particular chart. And I think this chart dates back to last week, Thursday. But there's an awful number. There's a couple of the short squeezes on this list. National Beverage has been rumored to be one of the companies that people are bidding up in an effort to break the back of the short sellers in that particular one. But there's also companies on this list that I think make a really, really good study. One more slide, Mark.
Well, first of all, a clarification question, Ken. These were least chosen a year ago, right?
Right.
Okay, so then it doesn't reflect stocks right now that are least chosen, but I love what you're talking about here of identifying a few of those. Let me jump out for just a second. I'll come back here, Ken. Well, let's finish this off, and then I will show something the audience might want to take a look at.
Okay, well, remember I said that I looked for stocks that were performing at 150% or better. Besides that list that you just looked at, there were only 4 other stocks in the entire contest that performed at that 150 mark or better, and there they are right now. I knew the names of 3 of the 4. I was not familiar with TPI Composites, up almost 200%. It had been chosen by 4 clubs, 4 entries in the contest, and it might be a stock to take a look at because the other 3 certainly have been on a tear. We've heard people talking about them and making comments about them for at least a couple of years in all 3 of those cases. So it's good stuff if you're looking for stocks to get ideas from. As of January 29th, 5 of the top 20 entries were clubs. I noticed that as of today, the end of the contest, there are 6 clubs in the top 20. So clubs do pretty well. I would always take a look at the entries from some of these clubs. Groupthink many times gives you a lot of really good ideas and helps move you to the top of the list many times. I found it very interesting, and I've seen this in my own contest, that the top finishers of the top 5 finishers, they only had 5 or 6 picks each. The top finishers in this contest, and it goes over into our contest in Mid-Michigan as well, the top finishers don't choose a whole lot of stocks. They put their money into a few number of stocks and then let their money ride. But the top 5 finishers, only 5 or 6 picks for each of those entries, whereas the average for the top 20 was almost 8, and the average for the top 30, which I didn't put on here, was almost 10. So it seems that the lower you get on the list, the more stocks maybe you chose. And, how low can it go? Well, one of your stocks being cut in half or going down towards 0 can really destroy a beautiful portfolio with 9 or 10 other stocks that are doing winners. I also noted that 11 of the top 20 finishers had chosen companies that during the year were either acquired or were taken private. And I listed the companies, and I don't know if that's an exhaustive list or not, but I think it is. These are the companies in those top 20 finishes that were taken private or merged with somebody else or were spun off or something along those lines. So there's some other good ideas. A lot of us knew about BSTC, but a lot of us should have known about Livongo Health. That was sitting in a lot of the top 20 portfolios. And there's just quite an interesting group of companies down here that were spun off. So all in all, great contest. Mark, I'll let it go back to you. You were going to go somewhere else here for just a second.
I just want to make sure the audience is aware that as I go through and finish out the dashboards for this year, which will be tonight and tomorrow, if you go to the update for this week and next week, if you just go to the This Week at Manifest, there's our monkey in the conference room, of course, but I think I've got one on here. Yeah, down at the bottom of this, as part of this is a weekly thing, so you can go back and look at the last couple of weeks. We call it Discovery Club because we're bringing the companies to your attention. The names that are going to appear here on this list for this week and next are going to be the companies that are new discoveries in this year's Groundhog portfolios. So if you come back to this page, and we'll make sure that we revisit this a week from now, there will be a list of, I'm going to guess, approximately 20 companies that are going to very closely resemble the list that Ken shared here. Least chosen, and it'll be this year's least chosen. And I do think that'll be something fascinating to watch, Ken.
Yeah, Mark, we're getting a couple questions about specifics on the charts that I shown. And folks, all I can tell you is that data was taken from the database, and that doesn't guarantee that every single number was copied exactly the way that I should have copied it. It's there more for the interest of the names more than anything else.
Right. I think you did grab a couple price entries that were probably not right, but don't let that take away from the message, because I know those gains are reflective of what's in the database. All right. A week ago, and you can actually go back and look, we went through and covered a bunch of our favorite screens. I thought I'd give you a quick lightning round and just demonstrate a real quick, what my picks are going to be this year. Just real quickly, how are we doing on time? We're at 2:43. We've got time for this. Let me spend about a minute or so on each one. This top screen is the best companies from our database with respect to the relative strength index. We love them below 30. We love them even more below 20. And so these are companies I would be looking at putting in my Groundhog portfolio for this year. I will tell you that my first selection is going to be that one, eHealth. It's a company that appeared in a number of different things. Go ahead, Ken.
And I will tell you, Mark, that my investment club has jumped on Dollar General, sitting where it is right now. We really like the concept of Dollar General, and we don't happen to think that Dollar General is tied to COVID, as a lot of people think it's tied as heavily as it is. Dollar General has data that goes back 20 years, and the growth in Dollar General has not been any worse or any better in the last couple of quarters as it has been in the last 10, 20 years.
Yeah, I think it's very attractive. I mean, it's not the set your hair on fire type attractive, but it could be a real nice core position within a portfolio over the next year or so. Yeah, something to think about. And I'm going to just leave a note there by that one. That's Repro Med Systems. That's a COVID type stock that is in our small company list for this year, so I'll probably come back to that one. This second group of companies are companies that have the highest home run potential for the next year. According to the analyst consensus estimate, they could go up dramatically in price. I will also tell you that is the least reliable prognostication. It's a day for prognostication, right? I think I got the word right with Punksy Phil. It's one of the most least, well, you know what I mean. It's just not a reliable thing to do, but I am drawn to Global Cord Blood that we have covered in other sessions. And then I also like this one, this Guangshan Railway. That's a regional railway in the southern part of China that's adjacent to Hong Kong. And it's an interesting study. I'm also drawn to the fact that Morningstar thinks it's really, really, really on sale. Kind of interesting. The next sort, there's no column for this yet, but these are all triple play qualifiers in today's market. And I'm going to go ahead and add Alimentación. Go ahead and say it for me, Ken.
Alimentación Couche-Tard.
There you go. He knows the pronunciation. There's a couple other ones there that bear some intrigue. I mean, that's kind of an interesting one with what's going on in the car market. So those are all fairly compelling. The next group of three companies, and again, I'm going with these sets of threes as what has captured my attention. These are the highest companies with decent overall characteristics that have the highest projected return on value. Virtu Financial is a public market version of Citadel. They do clearing, they do high frequency trading. They are in the middle of all this stuff. I suspect they might be a beneficiary of all the stuff going on. I really like LGIH. It's showing up in a bunch of portfolios. It's not going to be in that least selected set, so maybe I would stray away from that a little bit. Myovant is an interesting study, very early stage, dealing with feminine health issues, mostly uterine related and assistance with reproduction related. Could be an interesting company. It's kind of fascinating that it showed up on this list. I'd probably put it on a watch list to monitor as opposed to adding it up front. The next one is just companies that have high overall characteristics according to our sort of companies. High return forecast characteristics in combination with good or excellent quality. I'm going to go ahead and I'm not going to do DR Horton. It's really neat that it showed up. By the way, I required that these be double-digit growers also, and DR Horton qualifies along with these two. And I would probably add those two to my collection. I'm trying to stay under 8 because Ken said that 7.7 wins the contest. How many is that? 1, 2, 3, 4, 5.
7 is the average for the top 20, Mark. 5 or 6 wins.
So I might have to wean off of one of those. But that you literally are seeing me go through my process for selecting companies. Now Kirk could do this in less than a minute with the way he selects them, but those will probably be the companies I go with this time around for my Groundhog 15 category. I left this slide in from the last week just to make a point that this is dominating a lot of our discussions here at both sessions. It has to do with the projected return on value. You guys already know the message. This is your first time hearing it. We're just encouraging you to spend some time with the concept as we sort it out here over the next several days. And I'll just leave with one last area of emphasis. This has to do with that group of investors in St. Louis known as Broad Assets, who are by far our long-term leaders in the contest, and they just continue to keep knocking it out of the park. One of the things that we have analyzed and determined that they often do is come up with a company that has explosive / launchpad / escape velocity potential. And this particular list of companies that we shared with you a week ago is a group of companies that you can see on the far right. The earnings for 2020 are greatly exceeded by 2021. In some cases going from negative earnings to positive earnings. But again, this type of launchpad thinking that can be quite effective. I'm kind of drawn to a number of these. I mean, Phillips 66, with all the carnage in that particular marketplace, that's kind of wild. I don't know how they're doing with couponing at Kohl's, but Kohl's makes this list. There's a few companies on here that I find somewhat interesting. Rapid 7 has been appearing in a number of entries so far this year also. Any thoughts on that, Ken?
Well, there's two sides to the story. Some of these have been discovered. I mean, you look at the par values for a couple of these and you say to yourself, I don't want to come very close to them as far as picking them right at the moment. It doesn't reflect on the quality of the company, but with a par value in the negative teens or negative 20s, you probably want to be very careful if you're trying to commit money to it. The old saw that we still teach in beginning classes is that the biggest mistake beginning investors make is not buying bad stocks. You buy great stocks, but you buy them at too high a price. And sometimes when the par value is shouting at you, I'm overvalued, you should believe what the par value is saying.
Yeah, there's some serious red numbers on here. Again, some of these are early stage challenging, but I'm also noticing a number of negative numbers here, which is basically saying a reduction in value over the next year. So again, this is a minefield. Be careful out there.
Yep.
All right, here's an example of a dashboard from this year's contest. This is Broad Assets entry in Groundhog Challenge 15, the 2021 edition. You can see they submitted it a couple of days ago, and if the contest were running, they're already up 25,000. Unfortunately for them, that goes back to $1 million at the end of the business day today. Everybody resets to $1 million, so if you have one of your dashboards and you're celebrating, I did see somebody was up to $1,060,000 already. That goes back to $1 million. So, but here is the list of companies that they have chosen. I feel that they've been a little more conservative than they've been in other years. Just leave it at that. These are the companies that they have chosen. I find it interesting that they think Clorox still has room to run. That's obviously been at the heart of what we've gone through in the last year, and very interesting. But here's the company that I think kind of fits the mold of this would be tough to invest in as anything other than non-core from our perspective. These guys are in rapid diagnostic testing, which they're obviously in the COVID realm. Kydell, I think, is the way that's pronounced. And what I want you to notice is that this is a company going from, I believe, single-digit earnings for last year to 19 for the end of this year to 36 for next year. And again, notice they're going from 1.6 billion for the quarter just ended up to almost doubling for the estimates for 2021. But also notice where they're projected to go from there. Now, obviously, in this environment with this particular type of company in the market they serve, this is a completely cloudy crystal ball, probably more than usual. But what I want you to notice is just these tremendous step ups from 2020 to 2021. And again, that is the type of thing that these guys have done over the years. Notice the 20 here, very low EPS stability, but that would be an example of one of the companies. And again, you might go looking for companies like these on this list. Any other comments or questions on that, Ken?
No, we did get a question, Mark. Somebody wanted to know which of those the club actually owned, and we don't have any way of knowing that. So unless the broad assets want to communicate directly with us and put an asterisk or something like that on the stocks they own, we can't tell which ones they have in their portfolio and which ones they've just put into the contest portfolio.
Yeah, I would speculate that they obviously don't own all of these, and I don't think that they necessarily have always owned the Launchpad stocks that have shown up in the Groundhog portfolio. After spending time with them, I'm pretty sure they have companies like Microsoft, and we have had fairly extensive conversations about Universal Display, because that's no stranger to our community of investors over the last few years. And I wouldn't be surprised. I will also note that Salesforce is showing up in a lot of portfolios this year. Ticker symbol CRM. All right. Anything else on that, Ken?
Nope.
All right. So again, watch for that. We'll put those starting points out. If you don't have your portfolio in, please feel free to submit. Here's your reminder that we do archive both the roundtable sessions, the monthly webcasts, and sessions like this, and in the educational sessions. You notice down at the bottom here, our COVID cancellation conference slides are available here, so you can actually go to YouTube and experience some of those. Had a number of questions on Sai's presentation, which deals with the preferred procedure and how he uses Manifest for verification and validation of his stock studies. And that was part of that agenda. So they are here. You can subscribe by clicking on the subscribe button, and please feel free to click on the like buttons. Smash the like button is what most of the YouTubers say, just to let us know what type of things you like. And we are all in this together. One of my favorite expressions. And there's a nice, happy Groundhog family who's weathering out the sheltering in place quite well. Any other comments, Ken?
Well, I heard two different people today, Mark, this morning use the phrase "never trust a whistle pig." So should leave on that. Yeah, that's evidently what the people that have a lot of these particular animals around call them.
They call them whistle pigs.
Yep, that's what they call them, evidently.
Now you've given me some research and homework to do. All right. So let's go ahead and we normally do talk about our library just for everybody's knowledge. We keep track of the books that we have talked about here at the Bull Sessions, and that is attached to this. And we probably will spend some time with The Myth of Capitalism in the not too distant future. All right, so with that, our family of happy groundhogs will wish you the best in this year's contest. I know we have a lot of groundhogs in the audience, and good hunting, everybody. if you were inspired by chance to reduce your number of entries from 15 or 16 selections down to a lower number, you still have basically a full day to do that. We'll be finalizing that stuff over the next several hours, so you are welcome to do that. In the meantime, best wishes and better investing, everybody, and we'll see you again a week from now.
Good night, all.